So what I want to talk about today is actually right in line with some of the initial questions here, is that I remember when I was going through school, it was very much like, okay, if you wanted to go do something entrepreneurial, you had to go and find a good idea and spin it out and then go get venture funded and then go from there. And while I was in school, I had written 3 business plans. And after writing each one of those business plans, I realized that all 3 ideas stunk, right? They were not viable. So I'm like, what am I going to do? And at the time, there's a guy, Don Jones. He was one of my professors. I said, Don, went with a buddy of mine, said, we don't have an idea. I mean, we've tried. You can't come up with an idea. I mean, automated parking meters. I was one of the things we did. We did all kinds of different stuff. None of them weren't good ideas. So we talked to Don. He said, guys, I'll fund you guys, go buy a business. And this is like the very, very early days of search funds and stuff like that. But he said, if you guys go do it, so that was enough. She wasn't happy with us, but then we turned back our offers. We said, okay, we're gonna when we graduate, we're gonna go and look for companies to go buy, and that's really how we got started. That's how I've been. Since then, all I've ever done is acquire businesses and kind of done this. So that's what my partner at the time and my very good friend Chris Farrells, and that's how we got started. And I'm going to kind of walk you through kind of some of the things. And the way this was actually something that I came up with. Somebody, when I gave a talk like this, I mean, this is 10 years ago. Someone was kind of stressing this, is that one of the things is that, when you're actually going and looking to do something entrepreneurial, what's kind of neat about it is you're hiring yourself. You're able to kind of like project what you want to do in life, and you don't have to go and necessarily go work for somebody and do what their vision is. Here, you can go find a company, and you can, for me, I'm not the most creative person. Like if you ask me to go, draw or something, or, if you, do some art or clay or something like that. But when it comes to businesses, I don't know. I kind of get it. And I love it, and it's fun, and it's kind of like the way to go and express yourself. So if you're in here, and I'm technical, and I'm a business guy, and I graduated from CMU in the MBA program. And so what I take in all these businesses is that I'm an electrical engineer. I use my electrical engineering degree combined with my business, with the best practices you guys are learning here, which is the stuff you use. These are the tool sets that you'll use in the real life. And then you go out, and then that combination and that ability and the relationships you're making here that actually, believe it or not, turns into value out in the real world. So let me just talk about the different, in the beginning here, mentioned, do I do entrepreneurship? Do I start something new? I want to explore, buying a business. Again, if you don't have the right idea, or if you're looking for something that's a little bit, let's say, less risk adverse, this is a less risk adverse approach to going and says, let me go and come up with the next idea, the next startup, and it's going to be successful. I've done both, and I prefer actually buying a platform company acquisition business and incrementally growing. It depends on personality. I think some folks were born to be entrepreneurs. They're like, I love starting with nothing and making it into something. I actually prefer starting with something, even if it's broken. I'd rather start with something and see all the mistakes they've made, because then I find it a lot easier to then move it and change it and then go from there. So some of the things that I encourage you guys to think about is if you were to go and look at this and evaluate, do I want to do, let's say you want to do entrepreneurship, you want to do something entrepreneurial, which I encourage you to do early. Any of my friends who haven't done it yet, they've got the big houses, they've got the kids, they've got all this stuff, and it as you get older, so it's a lot easier to just do it early, right out of school, maybe soon after school if you want to get a bit of experience, something. But if you wait, say, oh, well, I'll do it, when I'm established, or no, doesn't work that way, because all you do is you buy bigger houses and you do that. So I encourage you to, if you want to go entrepreneurial, the more you delay and the more you put it off, the less likely you're going to be actually doing it in real life. What I'm showing here is when you actually go to find a business and to do something different than starting from scratch. If you're starting from scratch, you guys have had plenty of seminars and classes and everything on that, where you're going, developing a business plan, and then going pitching to investors, et cetera, developing prototypes or whatever you're doing there. Here, this is, you've got to go find a company. And the questions I get is, how do you find a company? Which company do I find? Who do I talk to? All that kind of stuff. And I'm going to start to address some of those questions as to how, I can just tell you how we did it and how, if I'm advising somebody today, how they should go do this. The first thing you need to do, though, is really segment yourself and kind of get a little specific. A lot of times when I talk to people, they go, well, if I'm going to somebody, let's say you just wanted to go and talk to a private equity person, someone who is in this business, but they go and buy and sell businesses. If you wanted to go and talk to a lawyer who may have connections, or a wealth manager who might have an open business, and you say, hey, look, I'm interested in buying a business. I encourage you to get very specific in the type of business that you are looking for. A lot of times people say, well, I don't want to be specific, because if I say, well, I want to buy a service business and they only have a product business, then they're not going to think of me. And it really doesn't work that way. Just like in marketing or anything else, I would be very specific. What kind of company you're looking for. In my case, I don't mind earlier stage businesses that are troubled. I don't mind technical businesses. I prefer technical businesses. I prefer what's called a business to business sale. So versus business to consumer, I understand that sale. So each of you have different backgrounds. You have different strengths and weaknesses, things that you enjoy, things that get you jazzed, things that get you excited. I'm going to show you a bunch of stuff in here that, who knew that sewer pipes would actually get me jazzed? I didn't know that. Who knew that, rail cars would get me jazzed? It's crazy. This is what entrepreneurship through acquisition, or, let you do, is that you can fall into really cool opportunities rather than have to create them from scratch. So the first thing I'd encourage you to do is to say, how do I want to go about this? If you're thinking about your career, it's going to take you some time. You're going to have to go out and raise some money. If you don't have anything, which what my buddy and I did, we raised $10,000 from our parents, each of us, and then we had letters from Don Jones and 4 or 5 other people in Pittsburgh said, if these guys find the right thing, we're going to go and finance them, and that's how we got started. So then we started networking, and we met with 50, 70 people over the summer. When we graduated, all of our friends went to Europe and took some time off. We actually, right as soon as we graduated, we just hit the pavement and just started networking every day. And we met with all kinds of folks. And and I made all the mistakes of not having a one-page pitch sheet, not having a story. Just lengthens the process of actually acquiring your business. So the thing you need to know is what are you interested in doing this? Are you interested in buying a business and holding it for a really long time? Are you interested in turning around businesses? What's the size of the business? Do you mind going out and raising money, whether it be debt or equity? In which case, then you're probably looking for maybe a stable or more mature business. Or, even a stagnant business that you can go and raise money against? Are you looking for, like, for instance, me, I don't mind troubled workout companies. I could go in and look at them and say, look, I think there's real potential with this business, but it's being terribly undermanaged, which you're going to see tons of businesses like. The skills that you guys have here that you bring to the table are so much better than 90% of all the business owners out there, that when you go in and you see the 15 things you can do to improve it, get it into different markets, et cetera, it's amazing. Lastly is I encourage you to look to the industry. So if you've worked, for instance, when I came out, I worked in an industry called servo motor controls, which is pulse width modulated servo motor controls. It actually is motion control background. That's robotics and motion background. And I said, I don't want to go in that direction because, that business was starting to commoditize, which it was. And although I know a lot about it, I don't see there's big opportunities in that market. I will say this, if you guys have insights into markets, use them. It may not look attractive from the outside, but when you start looking at the companies, believe it or not, even in the least attractive market, like rail cars, who would say there's an opportunity there? There's actually big opportunities there. They're not obvious until you get into the markets and you kind of get your arms around the problems. So So another thing that I'm going to say is that I'll get into how to go about do this. But when you approach entrepreneurship in this way, where you're not like coming with your own idea, but you're saying, look, I want to build off of another platform company, and you go and you approach these companies, the first thing you're going to see is that some of what I've found is that every company really, and I'm talking about companies less than 50 million in revenue, which most likely the first company you guys are going to buy is going to have to be less 50 million in revenue. They take the personality of the founder, owner, whoever is running it. I mean, when you're dealing with companies less than 50 people in size, it's really if there's an owner and somebody who's driven it and has kind of got it to where it is, the company really takes that person's personality. That person is typically either very good at sales or they're very good at operations, and you can kind of go in and tell. If you go in and they're real salesy and they may not be completely organized, and how's your business, and they talk about all the sales aspect, and we got this, we got that, we got a pipeline, we got all these things, and let me tell you, these customers, they have sales focus. If you go in and if it's a factory or they're building something and you can eat off the floor, because it's so nice, or if it's software and everything is just perfect, and they don't have any complaints or anything like that, they may be operations focused. The opportunity in those businesses is wherever that person is not strong. So if they're strong in sales and you want to bring your operational experience to bear, then you go in and vice versa. So you kind of are looking for a business where you can apply your personal skills and interests in ways that the previous owners could not. So what you can see here is that these are very, very different businesses. These are all the businesses in the last couple of years that I've acquired. This is Red Zone. This is a robotics sewer maintenance. Believe it or not, I mean, they do have people that go in these sewer pipes, and I mean, it's disgusting in other countries. But we made robots that went in and inspect and fix sewer pipes. We got in the rail business. This was the first business right out of business school for me and my partner. And we bought actually a nearly bankrupt kind of EP&LE rail facility, and cleaned it up, fixed it up, started really growing it, and then we got a call from Trinity Industries, New York Stock Exchange, and said, yeah, we'll sell it. And then that was, for me, I was 27 when I graduated. So before I was 30, we bought this business, and then we were off onto the next business. So it's completely possible. And it took us, after I graduated, it took us 9 months to close this transaction. It was a troubled transaction. It was ugly, and I'll get into some of that later. But this is stuff that's doable. So then I've got in a software. This is Bluefish Labs. That was sold to Apple Computer. Parts Zone. This is a big parts distribution business, also called Minpar. We service the aftermarket parts and service parts business in construction equipment. And then my most recent one is TrueLearn, which was actually a software that closed the loop around education for physicians. Physicians, unlike all of us, they have to take these very high-stake exams, in order to get into their residencies and specialties of choice. And we help them prepare for those exams using online software. Probably a lot of stuff. You guys have Quizlet and everything. This is like Quizlet on absolute steroids for the medical field. So you look at these are all over the place. This is nothing similar here. That's not true. I look at all these businesses very similar. They all have a technical bent. We differentiated in technology. We were the first people in this industry to take the estimates, which are, when you go into the rail car industry, you have to take the estimates, and then we put them online so that they could very quickly see exactly that we weren't scamming them and stuff. And each one of these have strong technology components that I'm integrating with, basic business and entrepreneurial things, and then go to market, kind of with that. And there's a little bit of business to consumer, especially here. Although our biggest customers were universities, we sold to all the medical schools here. But in all these cases, in most of them, to business, except there was also a fairly significant business to consumer piece. So in the end, again, in my case, I did one at a time. Now I've got right now that we just closed on earlier in January, which I'm not running it. It's out in Denver, so we've got other people running it. That's called Meritech. But up to this, I've always kind of gone in and run each one of these, and that's just my thing. It's going to be up to you guys whether you want to be on the finance side, on the entrepreneurial side. I'm much more of an operator. I actually love to operate. I love to build teams, and I love learning about new industries and challenges. And these went fast. And, this went fast. And in terms of getting in, Bluefish went fast. I got in this thing. I had a 4-year plan. It took me 8 years to exit this guy. This was hard. Now, it was one of the bigger businesses here, but it was a hard business. And most recently, TrueLearn, again, that went fast and was really nice business. So each one is a little bit different. And, once you get into it and once you've done one, once we did the first Proline, then you just kind of know it. But there's no way to do it and to kind of get those skills if you don't go out and do it. Or you have to kind of go work for a private equity firm, or you have to go work for a venture firm or something to kind of get the feel of what it's like to go do. But I really encourage folks just to kind of go do it, or kind of get involved with the search fund or whatever. So just to kind of give a little bit of insight as to how I think about these things. So Red Zone, some of you may know Red Whitaker is a great professor. He's in robotics, and he was a good friend of mine. And I was just newly married. Moved to Connecticut, and I'll never forget. He got a phone call, and he knew that I knew robotics, and he knew that I had acquired and exited my other kind of distressed business. He said, "Eric, Red Zone's in some financial difficulties, I want you to come down and take a look at it and see if you can pull it out of its difficulties." I said, "Red, I just got married. I promised my wife I'm going to live in Connecticut for the rest of our lives." And Red goes, "That's fine. Put your wife on the phone." So I then handed the phone to my wife at the time, and I don't know what he said, but next thing I'm still here, like 15 years later in Pittsburgh. So these things happen in unusual ways, and I came back and got involved with Red Zone, and this was by far the hardest business I've ever done. If anybody, there's some engineers here. It is. These are hard businesses to run. Let me just tell you, they're not easy. But what we did here was, I came with a platform business, Red Zone. Red Zone had actually done a pretty decent job of what I'll call the kind of unique one-off custom robotic design type work for the government, et cetera. They had made, this is a robot called Houdini. This is a robot called Fury. This robot goes inside of tanks and inspects the metal thickness of tanks. And I said, what can I do to take this competency set, because we had engineers, we had intellectual property, we had ties to Carnegie Mellon, and actually go disrupt the market. And I looked at a lot of different markets, and I looked at a lot of different robots, and I said, I think the answer is sewer pipes. There's a huge number of sewer pipes out there. They all have to be inspected, fixed. You read all this. Look, we have a deficit of, $1 trillion to go and fix our infrastructure. And so I took this asset of, in this case, expertise, and very hardened, in some of this case, even more hardened than we're doing, nuclear level expertise, applied it to big standard markets, sewer pipes. You don't know this, but you're connected to your neighbors, not just through phone, but actually through your sewer pipes too. So you'll think of that next time, that you're connected right to your neighbors. But we use sewer pipes to be able to go and rehab and go and fix that. And that's just really taking a platform business that was really being used for research and development and applying it to a big market and then scaling from there. So this is the way I approach it. Again, you all have to come up with your own formula. There is no formula. Everybody goes, well, how do you know which company to pick? They say, I wish I could say that there was a formula. There really isn't. There's a little bit of art. This is why I started saying, people are creative. This is got no creativity except I don't know. But in this case, it's, I'm looking for not companies that service like a $15 million niche. Like, you can't do anything. I don't know what to do with that little thing unless I can identify, a bunch of businesses adjacent to that we can go acquire. I have to look at businesses that are addressing, $200 million or larger market sizes. I mean, that's what I kind of look for at a minimum. Secondly is the business has to have some way of addressing the customer's pain. So there's a lot of businesses out there that are nice to haves, right? Where they are not sustainable, or they're selling because they have good salespeople or good sales channel or other things. But I look to say, is there some pain that this company is solving through its products or its services? And then it's going to be a very sought after business and something you can scale with. Now, the other thing is like, for instance, I look for enormous consequences here if they don't buy my product or service. So, as an example, an easy example of this is in the medical field, in the test prep. Imagine you go through school, you just went through all your undergrad, graduate, you get medical school, you just graduate, now you're applying for your residency. And you're like, okay, I want to go to this kind of residency, I want to go to anesthesiology, and instead you're going to one that you don't want to go to, right? I mean, how bad is that? The consequence of failure, where you can't meet your goals because you didn't do well on an exam, it's great. We had no money, and they couldn't wait to pay us. They couldn't wait because we were addressing this big acute, pain that they had, which is, I have to get into the school of my choice. And that what we're doing here is actually addressing that failure. So what you'll see in each one of those companies, mine is Bluefish Labs, which that was a lucky sale. I sold that to Apple, but it was the worst of all those companies. I got lucky that was sold. But other than that one, all four of these addressed specific problems. When I put together a business plan and think about it, that's what happens. I was able to, kind of think of it that way. So other ways of thinking this is like, this is what we started with is, I had all this robot expertise. I had all the software expertise, at Red Zone. How do we go and attack a big market? How do we go and disrupt it? And one of the things we saw was in sewer pipes, and we went and visited Alcosan, which, people, you don't know it, but there's all these sewer pipes underneath our rivers, and they're really deep. And EPA is coming in suing Alcosan, Arletta Scott Williams at the time, saying, look, you guys need to go and fix these pipes and inspect these pipes. She said, we need to get in these pipes. They're 5 miles deep and or 5 miles long, and I can't get to them. So I said, well, we can try to fix that. And so, we went and applied that. And in this case, we took old papers and different inspection techniques and then translated into automated robots online, kind of think of Google Street View for sewer pipes. In the medical field, what we did was we closed the loop around when people would go in and take these tests, because we were actually testing them on the same stuff, similar stuff that they would be tested on by the real test. They kind of knew what their score was before they went in. It wasn't a surprise. And if they didn't think they were going to get the score they were looking for by using all of our predictive algorithms and different stuff, and in this case, we Uber group questioned, we solicited questions from physicians everywhere in the world, and we're able to kind of Uberize the question production industry in here to give them tons and tons of content to solve their ability to get very precise score estimation for their disciplines. So again, this is kind of like the old analog, non-tracked approach to, again, these are technical solutions to old world, old style problems. Does that make sense? Again, I can't say that there's a formula. Everybody has their own formula. I'll just share one other. I shared one of my best friends. His formula was, and he's much more of an operations guy, I'm probably more of a sales, marketing, engineering guy, and he saw a real opportunity where he's like, all these parts, railcar parts, and this is after the railcar business, which I couldn't wait to get out of the railcar business, but he wanted to stay in it. And he says, look, if we buy all these railcar parts from China and other places and import them, we can undercut all these, kind of staid old U.S. manufacturers. And that's all he did. And he did super well just doing that. It's a simple idea. We already had the rail experience, and it was a simple idea. Now, so don't do this. Don't do this now for obvious, like, who knows? I mean, Trump's crazy. But beyond all that stuff, there's other people doing that stuff and have been doing it. But he was doing it 15 years ago when no one was doing it, and it's those seeds of an idea that then allows you to then go and then build your business. So how do you find it? This is the big one. Okay, you're just coming out of school. You may know a few folks, but how do I go out and find it? Relationship. I mean, I got a little lucky. When I go back here, I'm going to be up front. I got a little lucky that it went like this. I had almost no time in between these deals. There was a little time here, and it didn't. And I did these two deals at the same time. So it wasn't like I had a lot of off time. I sold this business 2 years ago, and I did buy a business in the beginning of the year, but I'm not running it day to day, and I'm missing running it day to day. It is not easy to find the right business. But before you do, what you need to do is you need to go and you have to be credible. So there's really a couple approaches. You can either go direct to the owners yourself, or you can kind of work through channels, work through indirect means like investment bankers, like deal brokers, et cetera. And they have a lot of deal liquidity. They see what companies are out there. And especially if you're coming out of school, you can differentiate yourself. Go and buy a business. Profile or doesn't have this, that may be something in it. There are tons and tons of businesses people don't touch. I'm not going to touch that. I'll give you, I don't understand flower shops, right? I don't encourage anybody to go out and buy a flower shop tomorrow. I'm saying are illiquid, and that there's a big market to go out and do this and find those businesses. So again, get some commitments, know how to finance it a little bit, talk to some folks to get some letters, commitment letters, or know that when you go in and talk to somebody that they know that you're credible. And then secondly is the types of companies out there, like what I've talked about in the up to this point is what you need to focus in on. Are you interested in an operations-based company, in a sales-based company? Are you interested in manufacturing, software, flower shop? You have to kind of narrow it down to a thesis for yourself because you can't do everything. And if you go in and you try to do everything, that's actually worse than doing nothing because it's just too much. People can't ignore it and put you into buckets. So the way you actually go about do this, there's a little bit of an art to this. You want to get in the deal flow. There are companies being sold all the time. In an ideal way, you want to find a company with a proprietary deal flow. What that means is that it's not going through an investment banking process. It's not going through a deal broker process. It's something that you found. It may be a company that you may have a relationship into, or anything like that, or that someone just told you about. Those are generally the best because many times you get into that, you're not going to have big private equity fund, companies or anybody else trying to go and buy it. You can go in, and that's why I don't mind some of the non-traditional businesses. Most of the companies I've acquired in that list were not super attractive to everybody else, and that was why I was able to get in and get them involved. I will say that not every company deserves to be purchased. There are a lot of bad businesses out there. Don't think you can turn around every business because some businesses are actually meant to go away. And that's part of the art. It's not obvious all the time, but that's kind of your job and what you need to do. Here are the people that I suggest if you wanted to go do this directly, speak with. Okay, anybody that you can network with. I mean, when I came out, I networked with every lawyer, every wealth manager. I went down to Innovation Works. Frank Demler gave me 50 names. I went and spoke. We went and marketed to all those folks. We got a deal flow, and then all of a sudden we started getting leads. Now, if anything, I got to do more of this now because I've been running these businesses for so long. I mean, for a while, I would get deals like all the time, and now I haven't been getting as many. So I'm getting back into it. But even going around here, you've got spinoff companies. You've got all kinds of different. Like right now, I'm looking at a company that's bigger. It's in a bigger business. They're spinning out a division, and we're thinking about buying that division. So all of these things are things that you can either find out on your own, and you can go network some folks. A lot of it can actually happen around here, or you can go through an indirect way, where an investment banker, business broker, or through a search fund. I would say on the better deals, the attractive deals, they're going to put it through a process. They're going to ask for, can you give me an indication of interest? Can you then give me a letter of intent? They're going to have a whole process that they go through. They're going to want you to go through. But these folks and all these folks also know of a lot of illiquid companies, the ones that I was talking about before, the stuff that is not as attractive, and you get them cheap. I mean, the first business that we bought, I literally bought it for $70,000 of equity to start. I mean, it was like nothing. And we levered up. At that time, Chris Farles and I, we took a loan out with PNC Bank, and we're able to finance it. But but you can buy these for not a whole lot of money if they're troubled or if they're kind of not a super attractive company. So when if you're doing this direct and you're not working through, let's say, a search fund, or you're not in a process like I was talking about, like with let's say with an investment bank or a business broker, you're negotiating directly with the owner. And in the first business, I kind of knew. I said, man, these guys are going to run out of cash on this date, right? So we're going to go get involved, do some due diligence, and then we need to make a deal before that date, because if we don't do it by that date, they're going to run out of cash. And we did. When the date was, we did the due diligence, we put in an offer, and then they took it because they really didn't have another alternative in that particular case. And we felt that we could make some changes and really fix that business. You have to do the same thing. And they're maybe not all deals are as urgent. I've actually coached a number of folks that have come through CMU and have done this. And I would say you have to build a pipeline. You have to have multiple companies, because a lot of times what happens is if you have a somewhat decent company that is operating well enough, it's very difficult to force somebody. You can't force somebody to sell their business. You have to be the attractive option. So, don't waste time. It's working out. I've seen people actually close it. So you got to build a pipeline. You got to go after it. You can't fall in love with one company. When you meet with the owners, these are some of the things. What do you want to pay? How are you going to fund it? You got to instill confidence that you're going to be able to close a transaction. And just go through your due diligence. And just like if you were to come up with a brand new idea, whether it's an entrepreneurial idea or whatever, put together a business plan, and you're going to go out and buy this business, you can raise money off that like that. I mean, in a lot of ways, I find it a lot easier to raise money off of that, which is a going concern, a real business, real assets, blah, 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 than something that is, just a vision. And it's, at this point, all intellectual property. So, I encourage you guys to think of it in that way. So when it comes to the deal itself, this is, again, you guys will have a copy of all this. This is what you have to kind of go through in order to get the thing closed. And in terms of what we did with the rail car business, we actually had a lot of issues with that business, and we very early got a lawyer to help us through. If you've never closed a deal, which I'm sure a few of you have, all you really need is a deal lawyer to just help you through, what contracts do I need? What do I have to know about this kind of stuff? It's gonna be up to you to choose the right valuation, support that valuation, your business plan, and all that kind of stuff. But in order to get the thing closed, and in order to, kind of get it done, you're gonna have to use a good lawyer. And I've used in town. If anybody wants a recommendation, I've got plenty of them. And then you just do the stuff that you guys know. Okay, here's what we need to do to fix the products. Here's what we need to do to, to fix the business. Put it in your business plan. If you're going to go out and get bank financing, there's mezzanine financing out there that you can get, which is if there's good cash flow, people will give you debt for cash flow on the business. You can get it financed. Again, this is stuff that happens every day. And this is a way that you can go and express your desire to be an entrepreneur through. One other thing is in troubled businesses, what I've done is I've ended up negotiating with vendors saying, look, right now, you would not get any of your money back if this business were to be put in Chapter 11. We're going to come in, I'm going to bring new money, and we're going to pay down, but we can't pay down 100% of what you've done. But what we do is we'll promise you going forward. So I've worked out vendors even to the tune of like 70 or 80% of what's owed them in order, and then going from there. There's lots of interesting things you can do, and be creative in order to work it out and to actually kind of get it so that you can kind of take it to the next step. So going back to the real business, let me just kind of give you an example. And this was one of the most chaotic ones. So this is not standard, but it was our first one. And I remember not being able to sleep because of how we're going to be payroll in 2 weeks. We bought the business, and the first day we're in there, it was like 2 months I'm in, we just learned all this stuff. First thing is this guy came in, Joe Kowalczyk, and says, hey, we did all of our due diligence, given the information, says, I just need you guys to know, I own that railroad track you guys are on. I own the railroad track. We bought this whole facility. We actually have a rail car business. I can't have a rail car business without railroad track. He said, that's fine. It's your problem. I own the railroad track. Now, don't do this. That's a little bit bad due diligence. Someone gave us some due diligence. Railroad track is a little bit odd too, but in terms of its reporting. But anyway, we had to deal with this. And he goes, I've got a deal for you boys. Says, I like you guys. I'm going to sell you this railroad track. It's only going to cost you $175,000. Now, my God, we had a little $1 million business that ended up growing like hell. But I was like, where am I going to get $175,000? And make a long story short, 9 months later, we were happy to pay him $350,000 for that railroad track. So I would not have, very first big negotiations, I would have never learned. Who thought that it could go up like that? Well, we were dragging our feet. We weren't doing the right things, and we had to go out and raise the money. The business was doing well, but that's one of the things we learned, and you just kind of learn how to do it and do these things. The original owner, it's hard. Do you get rid of the original? Do you keep? As I got older, it got easier. You just always get rid of them. But back then, you got to work through it. I hired the wrong person. It was, a year into it. Next thing I know, we had to deal with the union organizing. And here we are. We're giving them improved health benefits. We're give everybody raises. And I just hired the. It was a union kind of oriented, that was what we used to, and he wanted to bring the union in, and we had to fight it. I didn't know anything about it, but so these things happen. They're expected. It's not going to go like you think in your plan. The very best business plan I've ever put together was the one right outside of business school here. It doesn't ever go exactly that way, and you just got to be able to, you have to be able to. One of our biggest ones was we had a 40%, we had account concentration where one of our customers had about 40% of our business, and then we lost that customer, and then we had to go and find ways to go, and we did it. But that's what, those, once you actually figure out how to resolve some of these issues, then irrespective of the business, this starts to, I don't know, it's like riding a bike, figure this stuff out. So, so here's some of my take homes. One is that when you're looking at these businesses, what I can even just say in my own cases, it's very easy to look at a business and say, oh, well, I could turn something into that. I would argue, think about that business, say, is this business really just a product? If you're looking at some of these smaller and struggling businesses, is this really a product or a feature of product in disguise of a business? So sometimes businesses struggle because they're just not, they're not really solving a big enough problem. They're really only solving a part of a problem that's being solved by somebody else. And that really what they're shipping and selling and what they're struggling with is that they're only really selling a product or a feature of product, and there really isn't enough there for a company. Avoid that kind of business. I got lucky with Bluefish. That was really, it was really just a product. It was a feature of product. It was not a standalone business. Like I mentioned early, you're going to get in. Once you buy the business, that's a whole nother discussion. But once you buy it, things are not going to go exactly like they are. Pivot and just go. And that's the fun part. This is a little bit hard. I mean, I'm be upfront. The only way that I know how to, see through difficult issues and difficult times is actually to go through it. I encourage people to do that. I've done that throughout all the businesses whenever we'd run into trouble. I would hope that, I could also look at what I'll call blocking and tackling businesses, non-traditional businesses, sewer pipes, parts distribution into the construction industry, medical software test preparation online, tracking. Like I didn't know anything about that stuff, but and it may sound like, well, those are kind of crazy and off the wall things, but there's value in actually going in and applying your skills to solving problems in that. Hire your friends. I've probably hired 20 people from CMU over the years in different companies. Get the owners out and, take risks. And like I said before, for me, I can't say that I'm the most creative person, but I love this, taking technical products and businesses and teams and put them together and then trying to go and disrupt industries and I encourage you guys to get in the game. If you don't do it now, it's going to be a lot harder later to be able to do that. So what are the questions? Yeah.
One of the ones that I'm thinking about now is with greater use of data. So are there any other sort of technology trends or technology disruption that you're thinking about that are along the lines that you've done in the past?
Yeah, there are a lot, honestly. A lot of it is sales channels, and a lot of it's moving online. Most of it involves data or the translation of analog processes to kind of digital stuff, and there's a number of niche markets that just don't keep up with those things. They may not, if they've been running a business for 20 years, they're going to continue to do what's worked. And if there's data or if there's other things that can be done, for instance, in the medical business, the way that they always wrote questions is they'd go and get all high prestigious physicians to go and write these questions, and they'd be at all these great universities, have all this experience, and but what we found out was that you never know if it's a good question unless you actually have somebody have a group take it, and you get all these statistics and everything. So then we said, well, why don't we, instead of going and doing that, why don't we actually just get questions from a lot of people and then use the algorithms to weed out which ones were good and which ones were bad, or fix them. We can then fix it, identify, okay, well, this is too easy. This is not discriminating enough. There's all this stuff. And like, for instance, that business, which used to be a manual business just done by physicians, then we just turned it into an algorithm, and to your point in the data. So there's little niches like that you can find everywhere that will allow you to go and disrupt kind of disrupt businesses. And it's data products, I think, are one of the greatest trends. Is probably the single trend that I would say is the greatest trend over the next 10 years to go into these kind of sleepy industries and really add a lot of value.
Talk more about get the owners out. Do you do that over a time frame, and do you get them to stay financially full?
That's a tough question. It really is it's an individual situation. I always tried to keep them in the first ones, and what ended up happening is what I find is that owners are wed to doing things the way they've always done them, and when you're going in, change, like, then some of the employees, you're trying. and you know, pivot if you have to. But what I found is that executives are very good at sales, and if it's a relationship-based sale, which things are becoming less that way, then there may be some continuity interest in making sure that you know that you're not risking that this person, that you have a customer that's going to, but generally, I would say, and it feels difficult when you're doing it because you don't know anything about the business. I mean, you go in, you actually learn quickly. Businesses are very robust. I mean, they don't just die overnight. I mean, I'm not saying it's not possible, but if they're a going concern and they've been going for 5 years or whatever it is, believe it or not, there's hidden brand equity in that business that keeps it going. And once you go in, the changes you make are going to be very positive because you're going to approach it a very different way than the previous owner, and it just works out. I mean, the reason why my knee-jerk reaction is get the old owner out. If it's troubled or if it's an earlier stage business. If it's a big established business doing well and you're really a private equity person versus going in and kind of changing the whole business or repositioning it, then under those circumstances, I would look more towards retaining that management team versus the that kind of thing.
So, you mentioned going out and finding these opportunities. How did you stumble upon this rail? Your first experience with the railroads, and I guess the core of my question is, what red flags do you look for? I mean, good red
Great
flags,
question.
right? Like they have red flags, that's an opportunity.
It's a great question. So the first one was that we just talked to anybody and everybody. I mean, Frank Demler was the first list. We got a list of all these people and we went out and talked. Now, I don't know whether, it's so much better today. I mean, it's more efficient. I would go to innovation things, get networking, talk to the people, understand what companies are out there, just try to get into the deal flow and of what's going on, and and then go from there. You do need to get into that. You talk to lawyers, bankers. There are some investment bankers that you can talk to downtown. There's other folks. So I mean, I have a list of right now. I'm probably evaluating, 200 companies. And I didn't sort those are all through that indirect channel. But there's ways to go do this, and if you are interested, I mean, there's ways that I can point you into getting lists like that. The red flags, as an example, a good red flag on the rail car business was when we went in, it was classic operations 101. We went in and we're looking at it and saying, they had a manufacturer. We were actually repainting the interiors, called lining the interiors of the rail cars, which is standard around that. And we saw that there was a bottleneck in their operations where they were running the blast system where and get all this stuff. That was the bottleneck of the system. What we found out was that if we just built another system, which we estimated would cost like $200,000 or $300,000, but if we built that, we could literally triple. That's what we did. Now, for that, half the employees, we had to go take more loan out. Got there, the thing just went great from there. But like that's an example of it took $300,000 to fix that, and then it literally tripled our revenue.
So what are the characteristics then of a company you would avoid or meant to value?
Again, I don't know that there's an absolute kind of hard and fast rule on that. I would say that it's service businesses are hard to scale, so I kind of stick away. I try to, if it's scalable service, I like it, but if it's just the consulting businesses, I stay away from stuff like that. I mean, engineering consulting, those are hard. If there's not something that's sustainable that you can't grow off of and kind of make it a bigger business, that concerns me. I mean, that just that basic thing is like, can you do more of this, get more market share, build the business, go into other, is this a platform or is this technology that I can build off of? If I don't really have that, and it's just like, you're almost just buying it financially, you're like, okay, this there might be some cash flow or fix some window dressings and I can make this thing work. It's not a really strategic sale. Like it's not a strategic purchase for yourself. So I try to make it where there's thing that you're making a change that's going to have a real impact in the industry and its performance in the industry. I mean, that's it's not a great answer, but that's the way I think about it.
Someone who would like to receive funding from investors, I'm always trying to figure out how much of a return I need to make my investors happy. What kind of return do you look for when investing?
If I'm passive, your standard private equity returns are 20%, 15 to 20%. If it's really conservative, you probably go as low as 15%, but it's probably 20% returns. If you look at a portfolio for venture investing, it's like 40%, kind of blended return. The stuff that I'm involved with, because I actually operationally run it, I mean, my returns are way, way, way higher, only because I'm putting the sweat equity, I'm making the deal happen, I'm running it. So I personally, but if I'm just making an arm's length transaction, you need to, I mean, it's a risk return, right? Some businesses, if you guarantee, I was looking at one business where they had really steady cash flows. If you can guarantee the money, it's almost like you're putting it into it's better debt, even though it's equity. I mean, so it depends on the business, but, I mean, I looked at one deal most recently. In 5 years, we wanted to, return 3x, investors' money, maybe 20-25% IRR. Make sense?
How do you get finance for borrowing by borrowing software platform?
If it's software or yeah. So if you're buying a software business, which this is actually really good. So let's say you have an idea, like this is the kind of stuff so you have an idea to do something better. In many cases, rather than go out and raise venture money to go buy and build this thing from scratch, you buy someone who may be a competitor in there, and you're maybe just buying the sales channel. They already have relationships, and you're like, hey, I can go and take my proprietary software and really supercharge this company, right? That is a fantastic way to kind of to get into this game. It's a fantastic way. So in that case, instead of going out and raising money for your idea and venture and say, okay, here's this proprietary software I want to build, you instead say, I've got this platform business, I want to go buy this business. And the good thing is I have all this IP and software over here that is synergistic with this other business, but I'm going to focus on buying this business. So the money you're raising can include, think of it like it's like a booster. There's assets, there's cash flow, there's receivables, there's things that you can point to and then raise money much cheaper. And then when you bring in, let's say, proprietary software that can really accelerate, differentiate that business, then that gets people excited, where now it's like, wait a second, I might actually get really, really, this has really good upside. The downside's limited for whatever reasons. But that's a great example. And I mean, that's essentially what we did with the e-learning business, with the medical business, was that I saw that the software was insufficient and that there was a lot that could be done to be able to improve it. We went out and improved it and then just disrupted the industry. Fixed the sales channel a little bit too there, but that's exactly what we did. Does that make sense? Okay. Fund the company you want to go buy. So you got to go find those businesses. Let's say it was in market, there's 5 businesses. Look at this. 3rd and 4th and 5th business, the smallest businesses. You say, look, I want to go buy one of those. You talk to all those owners, and those are easy. Because you can identify who they are. Say, look, I want to buy your business. See if anyone them, because sometimes it's hard to get some of these businesses. But if you can, and then you can go and raise money against that, and then put your business plan, put your software idea in that plan. It'll actually raise the valuation, but off of the sustainability, the cash flows, the balance sheet, going concern with decrease.
out a lot of companies in various categories like Living Dead,
Yeah.
Stable Mature,
Yeah.
Workout. It seems like you do a lot of workout. Is there a reason why you prefer that versus the other ones?
I started out doing workouts, and then I just kept doing them because they kept finding me. I mean, and now that I'm actually not, I'm spending more time finding the right companies. Most of the other ones are not as much workouts. Today, the market's, it's hard to buy businesses right now. I'm just gonna tell you, it's the market, the economy's too good to buy workouts. I see the least number of troubled companies than I've seen in a decade right now. It's hard. It's a hard to find troubled companies because the economy is doing well. But give it another year, it'll be nice.
Another one.
Yeah, go ahead.
When you talked about making an offer quickly, can you give a timeline from like first call with that owner, broker, whoever to making an offer, make decide quickly? How that kind of looks like?
If it's going through an indirect channel like a broker or an investment banker, they're going to send you a book with all the information. In that case, they're doing the business plan, which they stink. You get, none of them are right at this level. Now, if you're going big, a different story. But so you have to make your own assumptions, and literally, in many cases, you're just throwing an indication of interest off of that book, and it's applications or whatever. It just throw that thing in. That's through a channel. If you're doing, let's say you're introduced to this person, you're like, hey, look, I'd like to buy your businesses, and etc. It's a dance as to know when the right time is, because once you put that number out, you can't take it back. And if they're offended by it, you've just screwed it up. If it's too high, then you're spending the next due diligence period trying to get it down. I mean, and it's never too high. I've never seen anybody say, "Oh, well, that's a high number you just gave me." So, yeah, it's a dance of negotiations, and it's very much the personality of these owners. Some of them are spastic and crazy, and those have to be very delicate if you want the deal to close. Because they're flaky, you know. Going. We kind of, in some ways, raised our own search fund. Like we just raised some money from folks, and I actually invested in search funds. It's for me personally, I just best to do it. I mean, like set up, just go right in, get and operate. It just usually even a search fund, they're essentially paying you to kind of go do the due diligence. And businesses. That's hard. I mean, it's hard to find them. I mean, I've been lucky on that. I've gotten the first 5 kind of came quickly, and I just happened to be there. And now, I mean, I've been at it probably 2 years. I did close 1 deal, but it's not easy. I've had a couple offers, so it's not easy. Wait 2 years, but it could be not. I would say the other alternative to going to a search fund is to focus in on just speaking to these folks, investment bankers and business brokers, and because there's folks out there that they're getting paid to try to sell these businesses. Now, usually, even if they're getting covered by these folks, and these guys even see the small ones too, but if they're getting covered by these folks, then they're a little better. This brings you into a better quality business. If you find it here, you can get really good deals where you just get it, really inexpensively. The other thing that I like, deals that have gone through a process and it's a broken process, like, okay, I like this. They went to an indication of interest. They go to the letter of intent, they're in due diligence, and for some reason that process broke up. So the owners were like, hey, I had an exit, I almost had the thing sold, and it didn't go through. That's a good business because you can usually work with the owner. They're already softened up a little bit at that point. Feeling that not going to be what it is today. Macroeconomic. The economy has been so good for so long. But it's the first time I've really kind of felt this for a long time, that I think that we have to go through somewhat of a correction. And when we do, that's when there are opportunities.
Have you seen your rental businesses change now? I'm sure your first business you bought was pretty small.
Yeah.
Have you jumped up to maybe the private
Yeah.
equity side now?
Yeah, no, I mean, some of the businesses, like the most recent business we did was, it's 11 million, in revenue. Yeah, I mean, it's actually more, I don't mind raising money as long as I think it can grow, right? The problem is you go out and raise a $100 million business. Can I make that $1 billion business? I mean, that's not my superpower. I'm more like, if it's 100 employees, 50 to 100, I'm happy as a clam. When I start having managers of managers that are working for me, I'm not good at that.
Thinking about this career path, from being approached by operate for that.
Yes, yeah. I mean, yeah, and it just hasn't. I haven't connected with that yet. I haven't made that work yet. Because usually they're bringing me a deal or whatever. There's been a couple where some of the markets that I've dealt with are like, we'd like to own a platform company. We want you to go and buy these things. Again, that gets into the search fund stuff where now you're willing to cede some control, which in many cases it's still good to do that. I mean, if you're taking on a bigger pie and you can grow it, and it's still good. I mean, one of my good friends essentially went and did this in the business. He was an executive at Siemens, and he he ended up rolling up a whole series of companies and spinning out and growing a $2 billion business. He did that, but obviously he was a smaller portion of that, but he has superpowers in that. Like, he is awesome, with companies that are thousands of people. I've only ever focused in on 50 to 100. I think the biggest is maybe 125 employees. And beyond that, you start getting to managers of managers, and I'm not like kind of working directly with people. I'm working with people who are working with people, and I don't know. I don't think I'm as effective there. I'm probably better with the product and kind of, with the market directly. Very good. Thank you.
So much.
Yep.